the time to share the experience with us today, as well as all the participants for the attendance. I wish you all a fruitful day. Thank you for your kind attention.
Thank you very much, Doctor. Really appreciate you, and hopefully at one point we will be here in Egypt all together. We will move on to our first session of the day, the African market structure post-COVID-19. Now, the market structure of trading changed since the pandemic, beginning of 2020. A spike of new retail investors trading in capital markets was witnessed. Our next session will ask the very, very simple questions, as complicated as they are. Is this sustainable or not? What is the driver for this? Can we see institutional investments competing again? The moderator of our session is Dr. Nashwa Saleh, founder of BAS Trading and Senior Policy Advisor of CNED. Our speakers will be Nadini Sukumar, Chief Executive Officer, World Federation of Exchanges. We will have Dr. Mohammed Farid Saleh, Executive Chairman, the Egyptian Stock Exchange, and Chairman of the Federation of Euro-Asian Stock Exchanges. Mr. Ahmed Attout, Division Manager, Capital Markets Division, Financial Sector Development Department at the AFDB, and Mr. Dr. Alex Powarski, Director of Capital Markets Development at EBRD.
Thank you very much, Ashraf. Good morning, everyone. I'm very happy to be joining you today, although unfortunately it's not in Egypt or in Luxor, as Mohammed was just mentioning. This was where the event was supposed to take place. We have a number of distinguished panelists with us today who will be talking about the structure of African capital markets post-COVID. They will be sharing some of the recent trends, specifically they have seen in their markets of coverage. And for Nalindini, this would be the global markets or the whole world. And they will also be sharing some thoughts on what they think the levers for future growth and areas where they believe that both the public and private sectors could engage impactfully towards this goal within the current context. I'm going to just very briefly mention the panelists' backgrounds. You have their full bios online. I can't spend a lot of time on the bios because they're very rich. We will not have time for the discussion. So our first panelist today is going to be Dr. Alex Powarski. He is Director of the EBRD's Capital Market Development Department, and he was previously in charge of negotiations with the IMF on stabilization programs for countries in Africa. He holds a doctorate degree in public policy from Harvard, and he will be speaking to us first on the recent trends and levers for growth in his markets of coverage. And over to you, Alex.
Thank you very much, Nashwa, and thank you very much, colleagues, for inviting me and us to participate in this event. As you probably know, we, EBRD, are a relative newcomer to the African region. We work in several countries in North Africa, including Egypt, Morocco, Tunisia. And of course, we are also eagerly learning about the developments in the whole African continent these days. And so we're very delighted that you invited us to participate. My team and I prepared several slides that we will share with you, just to speak a little bit about the, to help organize my thoughts about what we see as trends. So I'm going to share my screen with you. Looks like it's working. All right, just 1 second. So you can see better. I'm going to make it full screen. All right, so there are maybe 3 points that I would like to dwell on. One, on what we see as trends in the development of capital markets in our region. And as I mentioned already, our region is only partly composed of countries in the African region. However, the kind of lessons or common trends we could touch upon together. The second point is related to the importance of local investor bases. And finally, maybe touch upon on the subject of ESG products of emergence in our region. My team and I have been working in recent months on something we call Financial Markets Development Index. It's a new index that we prepared to help us better understand trends in the markets and also to target our technical assistance and support policy on the policy side, and also in some cases on the delivery of new products in our countries. And this index will be launched in our transition report in November. However, some thoughts from that, some findings of that work, would like to share with you today. What do we see in the development of the capital markets in our region? We see, first of all, that the context for the development of the market on the macroeconomic side has actually improved in much of our region. So you see here the chart that shows that compared to 2014, most countries in 2020 appear better on the macroeconomic conditions trend side. And I won't dwell here on the methodology for this index. It will be revealed in the coming weeks, but it aggregates a number of variables together. And you see that over the past 5 years, before the pandemic in particular, there was actually an improvement. There were a few countries, and some of them are notable exceptions, where the situation deteriorated. And in this region, it is Tunisia is an example. However, on average, the trend has been relatively positive. And so we actually see a very good trend and a good context for capital market development on that side. The other area where the trends are also quite positive is related to the legal and regulatory reforms, and the environment and trends here also quite encouraging. You can see here that basically virtually no country deteriorated on the legal and environment index in our future FMDI index. And basically a number of countries improved, including countries in this region, Egypt in particular. Market infrastructure is also improving, and it is quite important for development of the markets, as those of you on this seminar today know really well. And we see improvements in the ability of international investors to access local markets. We see clearing infrastructure improving throughout our region. Efficient settlement security transactions processes are being introduced, and secure custody being implemented throughout our region. You could see in particular, I would remark that Egypt stands out because it was a quite significant improvement over the last 5 years in Egypt and on the infrastructure side. However, so here comes the however point. If we compare with the legal and regulatory environment, liquidity and depth of the markets remain a challenge in all of our countries, more or less, throughout our region. And our region, important to stress, includes quite advanced countries, countries that are already in the European Union. And if you look at those countries and throughout our region, compared to the legal and regulatory environment, the depth and liquidity of the markets is still relatively low if compared to more liquid and advanced markets throughout the world. And what is important to say also that larger countries such as Egypt or Kazakhstan or let's say Ukraine, they find it a little easier, or Russia, let's say, easier to maintain significant liquidity because they are larger and are able to organize more liquid markets. But generally speaking, it's a challenge throughout our region. And the other important challenge is related to the creation of the local investor base. And I will say a few words on that based on recent conversations and other reports and work we've done on the analyzing investor bases in our region. And we see that, unfortunately, investor base is also a challenge, and partly it is because of policy context and the way, for example, the pension systems are organized, and to some extent, it may be related to kind of history. It takes time to develop investor bases. And so some of the countries in our region were very much dependent on the state for future savings, for retirement savings. So you could see here that, for example, of the 3 countries in our region that are in Africa, Egypt stands out. And unfortunately, Tunisia is relatively far behind in terms of the investor base. As a bank for a few years now, we were doing conducting investor-based studies where we, together with an international data provider, worked on surveying investors, in particular institutional investors working in our countries of operations. And we find several interesting moments there in the latest study. Well, first of all, as I already mentioned, liquidity and local investor base are their areas of concern. They feel that countries where there are local bases and liquidity is already relatively strong, they are much more comfortable working there as well. So it's a kind of a virtuous cycle where they are interested and the markets become vibrant as a result. They're also interested in issues of corporate governance and more recently in geopolitical developments. But I think an important point of this slide is that basically over time, over the last 3 or 4 years, as we were doing this study, there was a significant shift of interest of institutional investors in ESG investing. So basically the elements of ESG, in particular environmental, so green remains a key driver for their investments. But basically we found that this year compared to previous years, all institutional investors operating in our region that were surveyed are saying that ESG is an element or factor in making their decisions about investments. And more recently, we had conversations within the context of the Vienna Initiative with institutional investors, and we find kind of a bit more information about their interest in ESG. So they are very eager to see more ESG products emerging in emerging markets in our country's operations. They also believe that these investments are likely to be more sticky over time, so less volatile, which is for many countries in our region is a big challenge. So the authorities and societies would like their markets to be less volatile, and sometimes they're cautious inviting foreign investors. So the investors are saying if they see more ESG assets, they are likely to be more sticky just because of the nature of types of investors interested in these products. They also hope that major foundations, governments, European Union and others would provide some reinforcement for these type of investments. For example, augmenting risk of products in ESG sphere. Second point is that investors communicate over and over again that it would be difficult for most countries to develop vibrant financial markets without developing local investor bases. So it is not possible to rely exclusively on cross-border investments to have a deep and vibrant market. They also are pointing out that in some countries, regulatory weights, in particular, this relates to countries where banks are active in the capital markets, that regulatory weights of ESG products remain, how can I say, they don't incentivize movement to green or sustainable investing. And so they hope that over time, the trend that started in some markets would spread more widely of making kind of incentivizing this investment through regulations. And finally, enhancing transparency and capital flows and improving availability of data is another ask of institutional investors in our conversations with them. So I think I'm going to stop here. Actually, maybe, well, actually, no, there is one other point. So kind of in summary, so developing local investor bases is a key challenge throughout emerging markets. And there are countries, we see our countries take different paths on this way, some through private pensions, some through developing a retail base through second pillar pension systems. Other are stimulating liquidity by stimulating cross-border solutions. In particular, in our region, Pan-Baltic market stands out. These are smaller countries that decided to organize a common market and are doing quite a lot in this regard. Once again, ESG trends seem to be persisting, and which is generally a good trend. And we IFIs will have to play a role in supporting issuers, market platforms, and governments to ensure the emerging markets are not left behind by this trend. Thank you very much. Stop here.
Thank you very much, Alex, for this. Very informative. And I would like to then invite Mr. Ahmed Ataout, if you would like to share some of what the AFDB sees as recent trends and levers for future growth. Just before you, so Ahmed has more than 21 years of experience in MENA and sub-Saharan African markets. He currently leads the financial markets development team with the African Development Bank, and he has participated in funded and unfunded transactions of around $3.5 billion. Over to you, Ahmed.
Thank you, Nashwa, and thanks for organizing this very interesting session. I think the way I'm going to tackle this subject is to complement what Alex has just presented from what is the trends from in terms of numbers at emerging markets, especially in North Africa. Our view is a bit the same, but our lens or our scope of work is a bit wider when it comes to Africa. So we're covering all African countries, all of them. And we are dealing with different regional member countries that are in different maturity stage. Some of them showed very strong resilience when it comes to post-COVID, and some of them has really suffered. Thus, from our point of view, there is no one solution that fits all purposes. Just to give you a background on our mandates, so we are really into deepening and widening capital markets in Africa, and we are doing so by developing capital market structure, working with regulators, stock exchanges, governments, central banks, and setting up regulatory frameworks, boosting regional integration, and also aligning the activities with the international best practices and standards. We are very keen, and one of the three areas that we're really emphasizing on currently, to follow with the post-COVID era, is debt management, enhancing mobilization of domestic savings, and also crowding in of institutional investors. And we're doing so through different type of interventions. So we are really working with debt management offices at central banks and ministries of finance to enhance their capacities. And we're also working with the stock exchanges and institutional investors in a way that we are trying to help them in introducing new asset classes that are meeting the prudential investment criteria. And here really I'm talking about pension funds and insurance companies. We are also deploying the bank assets and funded and unfunded products to introduce new asset-backed securities, and also helping liquidity facilities to be established, and also promoting equity funds and bond funds. Our approach before, now, and going forward, that we split Africa into 5 regions: north, south, east, west, and central. And also in terms of sectors, it's also split into sectors. And we are structuring our interventions really in a way that is aimed to produce impactful results in a very short period of time, that is really replicable, sustainable, and that can fit into the purposes of the African Development Bank policies and strategies, and of course the government's needs to mobilize long-term capital from the private and public sectors. Our interventions are, as I said, are split into sectors with the aim of create this type of conducive environment to crowd in institutional investors' resources to infrastructure and SMEs. To give you some examples that we are trying to develop, and which is actually being informed by our previous interventions in other African countries. So we are really working with as I said, stock exchanges, governments, and central banks and regulators to review and update the legal and regulatory framework governing the financial sector in the target markets. And we are helping them in setting up this type of CSDs, custodians, depositories, internal control and brokerage, and of course, this ability to cross list and also to support them in the price discovery mechanics. Again, bear in mind that we're dealing with more than 50 African countries, and again, they are all in different maturity stages. So every market has its own specificities and also has its own strengths and weaknesses. We are also from another point, we are helping the sovereign bonds by setting up the African domestic bond funds. It's the first African sovereign exchange traded funds that is helping in giving exposure to investors in different African local currency sovereign bond markets. And it is a very important vehicle as it will help private sector and other institutional investors to tap into these resources and channel them into African sovereign local currency bond sector. When it comes to SMEs, we are really focusing on supporting innovative solutions when it comes to debt and equity. So we have invested equity investments into the ASEA IDF funds, which is helping SMEs to access this kind of risk capital. We are also investing in the Africa local currency bond funds, which is really helping SMEs to go into capital markets list and so on. These kind of models are what you have been doing in the past, and this is what you are gonna replicate in the future. Of course, there will be different type of structures, but those are more or less the parameters we are going to follow. When it comes to infrastructure, we are really supporting the introduction of the infrastructure credit guarantee schemes. So we started with Nigeria, with a well-known infra credit, and we are working with the different stakeholders in the region. We are also trying to promote this kind of alternative capital market solutions to support resourcing or sourcing channel resources into this kind of infrastructure projects. We started, as I said, in Nigeria, but we're also trying to open it up more into Kenya and moving to North Africa and Egypt. We are too much engaged in mortgage finance and mortgage refinance companies, which we believe it's a very good asset class when it comes to capital markets, and it's very attractive for pension funds and insurance companies if we're really looking for them to mobilize their funds into the real sector. We are too much into as well into insurance companies and the likes. What is really important and we are really expanding on is regional integration. And we are working on the flagship African exchange linkage projects with the ASEA team. And in a nutshell, its objective is really linked with the priority area 1 of the African Union agenda and the African Continental Free Trade Agreements. And it aims at establishing a liberalized markets to aid the movement of capital and facilitate investments and deepen the economic integration of the continent. Well, again, as we are splitting the continent into blocks, we are also into the West African Monetary Zone and the Central African Monetary Zone and SADC region as well. We have but I have two main big initiatives that we're working on. One has been already launched, which is the Capital Markets Development Trust Fund. It has helped us before COVID, and it's really very crucial for us post-COVID. And it works on the pillars of, as I said, the upstream, downstream, and creating this kind of enabling environments through technical assistance resources. It is already established, and for those who are really interested, we're more than happy to work with them on it. Last but not least, we're also setting up the Africa Corporate Bond Program, which from our point of view is a very important solution for SMEs and large corporates who are really keen to tap into local currency, long-term local currency funding through local capital markets. I will stop here, Nashwa. Thank you.
Thank you very much, Ahmed, for this. Really good focus on the interventions that the African Development Bank is engaging in, and actually quite a wide array of instruments and support that you are providing there. Obviously, very crucial, especially post the pandemic. So let me, Mohammed, Dr. Farid, if I may invite you to come in next. Now that we have spoken about Africa, if you would like to say a few words about Egypt, and then it will be Nanindini for the global perspective.
Thank you, Nashwa, and I would like to thank Dr. Alex and Mr. Ahmed for their comprehensive, I would say, presentations and discussions pertinent to what is happening in terms of reforms and support from the AFDB and in various areas of the financial markets in Egypt and Africa in general. Probably they touched base on the important aspects that we mentioned in our opening remarks associated with further developing the fixed income markets for trading of treasury bonds, government bonds, and as well private sector bonds to deepen the capital markets and enable, I would say, the different institutions to have an investment strategy and investment financial instruments, investing in financial instruments to further deepen and avail financing for the real economy. One point that I would like to discuss probably before mentioning what has been happening in Egypt in terms of reforms on the capital markets front, or what we're seeing, probably I would like to touch base on the US market based on some intelligence reports and related to the main topic of this session is the participation of retail investors in our markets. And as we say, it's not an Africa phenomena. It's not an emerging markets phenomena. Actually, it is a global phenomena that we need to be alert to and see what should be done on various fronts. So, for example, as per some of the data and resources, we have been seeing retail investors' participation in 2010 increasing or reaching 10.1% of total market trading. According to the report, the latest figures gives this participation 23%. So we're talking about 13 percentage point increase. When we look at the institutional buy side of trading, in terms of the equity volume of the US market, we have seen a 42% in 2018, declining to around 26.7% in 2021. So basically, we are seeing a shift in the trading behavior being dominated by retail, or seeing a dominant position of retail traders or retail investors. Plenty of attempts was to complement this or trying to explain this phenomenon. One basic, I would say, aspect would be the technological advancements and improvements that we have been seeing across capital markets, among which, for example, is the African Exchange Linkages project that should be enabling investors, whether retail or institutional investors, to be trading across the African exchanges that are participating in this particular project. So technological advancements and enabling platform by brokerage firms allowed retail investors to participate much heavily compared to the years before. But this is not the only reason. We had two reasons that led to the spike happening in 2021 and 2020. Actually, in that regard, was ample liquidity due to the various efforts conducted by governments to increase, I would say, the funds availed for the economy at large and the society to overcome COVID-19 repercussions. So this ample liquidity, without having consumption as available as it was the case due to the lockdowns, led that this ample liquidity needs to fetch for something and fetch for an investment, and basically they found capital markets and stock exchanges in this realm. Another point was the ample or sufficient time. When you have a lockdown, people are trying to find something to do. So basically what happened, they diverted some of their time earmarked to invest and increase their investing in capital markets. So this is an opportunity because it expands the investor base definitely from the one side. However, it creates some challenges if it is not coupled with a significant increase as well in institutional investor base. Ultimately, what exchanges would be looking for would be educated speculators and long-term investors, incremental investors that would benefit their economic conditions in the long term because of definitely the significant differences between equity performance and fixed income performance in the long term. In Egypt, it wasn't that different. Starting, I would say, from the 18th or 19th of March last year, 2020, we have seen a concerted action by the different economic players, the central bank, the regulator, the capital market authority, the exchange, and other players, and the government as well, among which was to reduce the stamp duty taxes that are being, or the stamp taxes that are imposed on traders in Egypt. This was reduced significantly, reducing the dividends tax for investors that get to receive cash dividends from listed securities. This has been slashed to half the value if the company is not listed, and several other reforms to increase and promote, I would say, the activity in the market, facilitating the process of treasury stocks repurchase by companies, by the exchange and the regulator, having the president announcing a stabilization fund for trading, not for market directions, but for the trading to ensure continuity of markets. And this fund, there wasn't much need to resort to it, but having this available for market participants ensured the, I would say, confidence. And since that date, we have seen significant presence by individual traders or retail investors in the market that led to an increase of 10 percentage points from the 55-60 mark participation by retail investors to around the 70-75 percentage mark participation of retail investors in that regard. So Egypt was no different when it comes to the increase of the retail participation. So what can be done going forward, or what is needed to be done in that regard? One would be seeing significant improvements and investments from the pension schemes and insurance companies, as my colleague Atoud has mentioned it. This is quite important for insurance players to understand the benefits of long-term investments, specifically when it comes to pensions and other aspects that are long-term in nature when you come to investing. The problem with having limited development when it comes to public pension schemes, private pension schemes, and the others would be the lack of investment in equities or the financial markets at large, and hence not benefiting from the differential performance, if we're talking about the long term, between those types of financial instruments and the other types of investments. And hence, if this is not complemented sufficiently, probably exchanges, and this is something that we have done at EGX, we need to increase the levels of financial and investment literacy to a great extent, to educate investors that if you are not, I would say, a proficient trader yourself, you have some other alternatives, among which are passive investment vehicles like ETFs. You have funds that do invest solely in equities if you want to absorb some greater risks in the long term, but with some much higher returns in that regard, to create, as we spoke about it, the middle income class in the long term that are benefiting from economic growth. Ultimately, economic growth is driven by companies that are listed. Some of them are listed in the market. So another point that would increase the investor base, but through as well, or to, I would say, institutional investors, would be the facilitation of funds to get listed in our markets. This is a crucial point, and I believe the EBRD, they had a very extensive study on the differential performance of various venture capital and private equity funds, and comparing the performance of those types of funds between being listed and not being listed on exchanges. And they found that being listed on exchange in itself is improving due to the governance, due to the disclosures and the other requirements, showed that those funds are outperforming other private equity venture capital funds that are not listed on exchanges. Here, you're availing for individual investors an opportunity to invest in startups, in entrepreneurial spirits, if you have the VC being listed in the market. And hence, you are supporting companies from the one hand, or ideas, support the funding for new ideas that ultimately create the economic growth in terms of innovation, because of the innovation of those type of companies. And then you as well avail this, I would say, potential growth to investors to benefit from in that regard. This is basically what we have been seeing, and what is needed is to increase, as well as mentioned by Dr. Alex, is to increase the investor base and increase the investor base for institutional investments. Can be done as well through retail investors, but through, I would say, investment vehicles like funds to benefit from capital markets going forward. In terms of advancements, as you have seen, we have been adopting and reforming plenty of our markets. And I don't want to expand in this area, but the fixed income market, we have embarked on a complete advancement for a trading platform whereby we have been seeing significant, I would say, growth from the 50 billion EGP mark a couple of years ago to around 366 or 400 billion trading mark of treasury bonds being listed in the Egyptian exchange. And the technological advancements is an enabler for, I would say, traders and market makers in this particular market to see the benefits of investment in that regard. In addition to plenty of other reforms that indeed led to an improvement in liquidity, as we have seen in the aggregate report by Alex, the turnover and so on and so forth. But still, this is not sufficient if we to cater for our ambitions, as they say. Plenty of effort should be conducted, and other reforms should be conducted to have the complete spectrum and to create the link between the real economy, or to further expand and strengthen the link between the real economy and capital markets, and for investors to benefit from the economic growth that we're witnessing in Egypt. Yes, despite the COVID-19, probably we were one of the rare countries that had still positive economic growth, definitely much lower than what has been expected or planned for. It was planned for around 6 or 5.7% economic growth. We came down during the year of the pandemic to around 2.3, still positive, lower than what has been targeted, but still positive. How can people benefit from this economic growth? It cannot be done unless they participate through capital markets, and we see more companies getting listed, public and private sector companies being listed and traded. And thank you, and I don't want to take more time. Thank you.
Thank you very much, Mohammed. Without further ado, we've now heard a lot about what has been happening in Egypt, actually some very interesting developments despite of COVID. I would like to introduce Ms. Nanandini Sukumar. Nanandini is the Chief Executive Officer of the World Federation of Exchanges, which is home to 45,000 listed companies and a market capitalization of about $82.5 trillion. Nanandini has been the CEO of the World Federation of Exchanges since March 2015. Prior to that, she had a long track record with Bloomberg on building markets infrastructure. I think we most likely will not have time for questions after, so I apologize for that. It's my time management, but we might have like just 2 minutes for burning questions if people have them. Nanandini, over to you.
Thank you. I hope you can see my screen now.
Yes, the slides are clear.
Yes, thank you very much, Nashwa, and congratulations all of you. I was listening rapt to Farid. As always, he's a wonderful bridge between Africa, emerging markets, and international markets, because I was listening to him and smiling and thinking about my own comments, which I will now make shorter because he has said a lot of it for me. We are, as always, aligned. So I won't go into what we do. I hope you all know what we do. If you don't know what we do, please speak to Farid. I would like to say in the African context, we have 10 members and 4 affiliates. EGX is a very long-standing member, and I want to congratulate Dr. Aminov for becoming, our newest member. So under his leadership, BRVM has joined the WFE after an extremely rigorous membership inspection. So congratulations to BRVM for taking its seat at the table with all the other global markets. So well done to that. I thought in thinking about this and what I wanted to say, I thought maybe a quick snapshot to give you what has changed and what has not changed would be to show you our regulatory priorities, our work plan priorities, first for 2020 and then for 2021. And then we would look a little bit at what was won and what became the other, reflecting the move from a pre to a COVID world, if you like. So in 2020, when it was business as normal, in January, we said regulatory coherence and dissonance. It's a polite word for saying fragmenting markets. How do we in a global world continue to be global, especially as public markets? Of course, technology, ICOs, cryptos, cyber resilience, ESG, market data, CCP capital and loss allocation issues, and market microstructure. So for those of you who know us, we work a lot on market development and on market microstructure. In 2021, we are now living the COVID world. In the COVID world, you see really the number one priority has been for the last 18 months to operational resilience of market infrastructure. I completely support Farid's comments. The exchanges and CCPs are to be congratulated for incredible resilience. You know, we talk as well, we are focused very much also on that growth, the growth agenda. That is the role of the exchange. Market data has not changed. CCP capital and loss allocation issues have not changed. ESG has not changed, it has become bigger, not smaller. And finally, investor protection and financial literacy, which sits firmly within, especially the inclusive recovery piece. So talking very quickly around operational resilience, you know, I always say we are the guardians as an industry, we are the guardians of the financial system. We are not only businesses, we are entrusted with a broader responsibility. You know, we are of being the trusted neutral operators of frameworks that underpin financial markets globally. So this crisis was marked by a call to close exchanges, to contain that volatility. And this was a new one. We've not seen it before. And the response from regulators and from the WFE was very clear. Excuse me. We gave guidance to our members. Exchanges should remain open. You know, the issues we have focused on for the resilience agenda. So if you want to think about where the industry sits now, it is resilience and, you know, a recovery or growth. It was also around becoming. It's also around having a lot of growth, a lot of the growth agenda. So for this end, sorry, have you lost me?
We can hear you, Nanindi.
Oh, sorry, you're disappeared for a minute.
Yes.
Yeah, sorry about that. So yes, we must have growth as well. So on the resilience agenda, you know, obviously keeping markets open, short selling, volatility, you know, appropriate mechanisms to manage them. I want to congratulate EGX in particular about its work around circuit breakers, etc. Remote operation, you know, BCP, business resilience, including information sharing. Around the recovery agenda and closely tied to resilience, one of the hallmarks of this crisis was the fact that markets remained open for capital raising, for trading, for hedging, for mitigating risk. You saw an enormous boom globally in volatility and in volumes. So those numbers speak for themselves. On average, an exchange handled 31 million trades per month. And then if you look at the number, it went up to 53.6 million per month during 2020. So a huge increase. In the first half of 2020, and this is a comparison to the second half of 2019, you know, equity markets saw record high levels of value traded, you know, up almost 50% and volumes 47%. So through it all, and let's look at the African number actually, because that was an interesting one when we looked at it. And this is something we should discuss further with all of you, with all my fellow panelists on the call, but perhaps not today. You know, if you look at the African numbers, they are not necessarily, you know, walking in sync with the global trend. Looking at the recovery agenda, of course, it is the role of exchanges in funding, support for issuers, you know, policy levers to enable growth in a post-COVID world, we hope, and of course, the role of financial markets in building back better. Now, Nashwa asked me to pick 3 themes. So that was one. The second one, the role of retail. We've done a lot of work at the WFE around retail. I commend you to a paper that we wrote a couple of years ago around the role of retail in markets. We have at the moment a multi-stage project on retail, covering multiple aspects, not only, not only the reasons and the market design that should accompany the rise in retail to ensure that you have optimal public markets, but also, what it means for the future. How do you protect market manipulation? Because where retail comes, you always have the balancing act. And I think this is a clear message that we would like to give policymakers: embrace retail and protect as well. The role of the exchange has investor protection at the heart of its DNA. So we have actually done quite a lot of work with our members. And as you can see, 57% has found that retail participation has grown over the last decade. And the reasons are just as Fareed said, decline in foreign institutional investors, multiple reasons really. The one that I liked best was the fact that people have been working from home, so that household saving has gone into the market. That is what all of us have been dreaming of for years. How do we facilitate greater use of public markets? And exchanges are looking to increase that. ESG, I'm not going to talk about it very long because I think you will have a whole presentation around it. We do an annual report every year. It's on our website. Please look at it. It's just come out. It's our 7th. We track engagement and initiatives. And you see that this time, the trend line is very firmly higher. So you have more initiatives coming from the exchanges. We have the WFE sustainability principles, which are the principles that bind exchanges globally or encourage them to live, gives them a toolkit. And then you find that more exchanges are committing resource to it, which is an interesting one and reflects also the mainstreaming of ESG. Looking globally, we found that governance remains on average the biggest priority for exchanges. This is not particularly a surprise, followed by the S and the E. Lack of convergence remains an issue. And of course, you have a virtuous combination of fixed income and green. So you're seeing green bonds rise across. Now, I'm going to conclude here, an action menu, the path forward. I'm going to be very brief here. What can we do? For those of you on this call, we must support and nurture public markets. Without them, there cannot be any successful capital market. Exchanges and CCPs should be deemed essential public services, in every national competent authority, in every jurisdiction. We need to create together an enabling ecosystem through policy levers. So regulation should really be a tool for growth in addition and development, in addition to being a tool for investor protection. We should pursue policies that improve and enhance liquidity, whether that's through bringing new product with an ESG flavor. I was fascinated by some of the comments that my fellow panelists made. And of course, do not fear volatility, manage it. And again, I commend the EGX for its work there. Create a strategy for risk management and post-trade. This call, here we are emerging in frontier markets, that the role of the CCP is a little further away, but as the market grows, we need to have that robust framework. And the best way to think about it, you have an opportunity to think about it creatively and financially. Finally, financial literacy and investor protection. So that, I think every exchange is doing at great length already, and we will continue to do. I always say it is a lifetime work. So join with us as our stakeholders on that roadmap. So with that, let me turn it back to you.
Nandini. I believe we do not, unfortunately, have time for questions, although if you want, as participants, of course, you can post your questions, and you can also post provocative questions and we can have the coming panels answer them. But unfortunately, we're out of time on our side. So let me just thank all the panelists very much for your interventions, and I'll hand over to Ashraf to introduce the next panel.
Nashwa, I believe Dr. Edo was raising his hand, the ASEA chairman.